Do you think it's very difficult to save money on your current paycheck? Even though putting money away for the future is a lot simpler when you're raking in large cash, it's not impossible to do so, even when you're scraping by on a small salary. As a result, I will illustrate in this video the 5 most effective techniques to reduce spending while maintaining the same level of financial stability. And if this is your first time visiting the channel, all you need to do is click the subscribe button to have access to additional information that could alter your life in a big way. The first piece of advice is to try to stay out of debt. It is imperative that you stay out of debt at all times if you wish to maintain your current standard of living while earning less money than you would prefer. Due to the double-edged nature of debt, it serves as an impediment to saving. For starters, that requires regular payments to maintain. In order to keep more of your hard-earned cash each month, avoiding debt is essential. Second, there is the recurring cost of interest payments when carrying a balance from month to month. These charges are normally between 3 and 5% for credit lines. Even though this may seem like a relatively insignificant sum of money, when taking into account on a monthly basis, it can quickly become significant. You may not realize how difficult it is to save on a limited salary while being in debt until you add up the whole amount you owe in interest and principal payments. In the case of credit card debt, the problem becomes even more acute. According to data provided by creditcards.com, the standard rate of interest on credit cards is 17.65% as of 2019. Therefore, incurring debt is a costly process. If you are trying to save money but have a limited income, you should stay away from debt and the interest payments that come with it. As a second piece of advice, find ways to reduce your home expenses. A person's housing costs will typically account for the largest portion of their monthly budget, whether they lease or own. According to many financial gurus, the sum of your bills and lease or mortgage payments shouldn't exceed 35% of your monthly after-tax earnings. However, despite the fact that this expenditure consumes a significant portion of your monthly salary, it also presents the greatest chance for discovering ways to cut costs. This essentially enables you to save additional cash, regardless of the amount of money you are bringing in each month. There are several ways for tenants to cut their housing costs. Finding a less expensive location is the first step. Rather than continuing to rent an apartment with 2 bedrooms, you should consider whether or not your needs can be satisfied by a single room in the home of a friend or relative. But if you are set in your current location and have no plans to leave, you should probably start exploring alternative options for cutting your rent. Effective tactics can include bargaining and exchanging your services, such as performing repairs in return for a rent reduction, or offering to sign a longer contract if your landlord seeks tenant assurance. If you have your own house, the recommendation that follows will be a tad unusual. While you definitely don't want to leave your apartment to cut costs, short-term savings from simple actions like turning off lights and using less water can add up to significant sums over time. On the other hand, renting out a room in your home is the most effective strategy to reduce the overall expense of living. With the money you get from renting out a room, you could have more than enough to pay your rent and other monthly expenses, providing you with the opportunity to save more money at the end of each month. Learning to distinguish between your wants and necessities is a third tip. Without a question, buying things is an obvious way to boost our mood. To be able to preserve money, even on a limited income, requires that you recognize the difference between necessities and luxuries. A good example would be the desire to update to the latest model of a car, despite the fact that it's probably unnecessary. You might be looking forward to wearing a new jacket this weekend, but chances are you already have a lot of quality jackets in your closet. When your income is low, you need to be extra careful with how you spend it and limit your spending to the essentials only. So how do you decide which products are wants and which are necessities? Everything that has to do with my survival is something I like to categorize as a necessity. These are the most fundamental necessities, such as clothing, food, housing, and transport. A Lamborghini is a mode of transport, no doubt about it. However, In its most fundamental sense, boarding the train also fulfills the purpose of getting you to where you need to go. Basically, everything that doesn't fit into your requirements category is a want item. This includes everything that is a supplement to the stuff you currently have in your possession. Take for instance, the scenario in which you decide to purchase the newest model of your phone solely for the purpose of obtaining better yet unnecessary features. Obviously, living on the absolute bare minimum isn't sustainable in the long run. So here's what I recommend doing in the event that you do decide to spend on something that you desire. Decide on a monetary target, such as $500 in savings. When you've reached your objective, you can finally buy the thing you've been desiring. Two things make this method excellent. It first aids in developing the practice of setting financial objectives. And secondly, it buys you some time to reflect on how strongly you want the object in question. It happens frequently that we make impulsive purchases and afterwards regret them. Therefore, it is essential to be able to distinguish between wants and necessities if you want to guarantee that you can save money while living on a low salary. Fourth, set up an automatic savings plan. Automating your savings is the last stage in making sure you save money while having a limited salary. Setting up automatic deductions from your salary can turn out to be one of the smartest decisions you've ever made in terms of your personal finances. With these deductions, you can divert a portion of your salary to a different bank account meant for savings, rather than having it completely deposited into your primary bank account. In my opinion, there are two main factors that explain why this method of saving money has been so effective. To begin, it enables individuals to specify the exact amount that they wish to put away in their savings account. With automated deductions, you may even customize the amount taken out each monthly salary. Second, it frees your mind from the burden of needing to save money, which enables you to concentrate on other essential matters, such as honing your abilities in order to increase your income. Fifth piece of advice: use your grocery budget carefully. The monthly cost of food for a family of 4 is projected to be close to $1,000, making it one of the more significant expenditures of money that we generally have to undertake. However, with little forethought in the techniques I'm about to discuss with you, it's not impossible to slash that number by half, or even more. Planning out your meals in advance is the first thing you should do if you want to reduce the amount of money you spend each month on groceries. In addition to improving your health, this will help you save money by limiting your purchases to necessities. You know, whether you're aware of it or not, a significant amount of food is lost or thrown away in this country. According to the findings of a study that was published in 2018 in Science Daily, the United States throws away an average of 1 pound of food every single day. This represents a significant economic cost that, if prevented, might result in significant savings at the supermarket. Not only will you save money by not throwing away uneaten food, but you may also save money by stocking up on bargain items, reducing your weekly grocery spend from $300 to $200 or even less. The second way to save money at the grocery store is to cut back on meat consumption. Because it's unquestionably the most pricey food item that can be purchased, meat is an easy target for shoppers who are looking for ways to lower their overall shopping bill. I'm not advocating vegetarianism as a means to budget though. However, you will be able to substantially reduce the amount of money you spend on groceries if you reduce the amount of meat you eat or replace it with less expensive alternatives, like beans. Last but not the least, only use cash for buying groceries. As a result of the seemingly infinite availability of credit, many people regularly discover themselves at the supermarket with an empty stomach and anxious to load their shopping carts to the brim. Rather than letting your hunger dictate your spending, prepare for your shopping trip by simply bringing the money you'll need. Those were 5 tips to save money on a low income. Thanks for watching. Click the subscribe button down below if you wish to transition from the life you have right now to the life you truly desire.